Hello friends, in today's session I am covering fixed assets accounting in SAP. So this session will be useful for the people who are preparing for interviews and the people who want some basic understanding of fixed assets accounting in SAP. I'm going to share my screen now. So I have prepared a document which I have distributed into 4 sections. So in the first section, I am covering the configuration. Second section, I'm covering the master data. Third session, I'm covering some important and common transactions which we have for assets. And in the last section, we will be covering the fixed asset reporting. So to begin the session, we'll start with configuration. So the first step of the configuration is fixed assets creation of the chart of depreciation. Under the chart of depreciation, we define the different depreciation areas. Significance of depreciation areas is to calculate depreciation through various methods. The depreciation that an entity recognizes in its legal chart of account is always the real depreciation area. And that is always assigned to the leading ledger, which is 0L. Other depreciation areas can also be used to post depreciation in parallel ledgers. So the need of creation of different depreciation areas is because companies have to calculate depreciation by different methods. For example, the legal depreciation is different and the tax depreciation is different. So the different depreciation areas enable you to calculate it in different methodology. Once the depreciation area is created, we assign it to the company code. So in standard SAP system, you will notice that country-wise chart of depreciation is delivered by SAP. We can create our own chart of depreciation by copying the standard chart of depreciation. The next step is the definition of asset classes. So we define asset classes of an entity according to its reporting requirements as well as legal requirements. So typically a company wants to capture assets in different categories such as furniture, fixture, plant and machinery, building, capital work in progress, and then define and depreciate the asset also differently for different asset classes. So once the asset classes are created, the next step is to create the relevant GL accounts. So for each asset class, a minimum 3 GL account has to be created. The first GL account has to be for the gross block, second GL account for the accumulated depreciation, and the third GL account for depreciation expense. A company can decide to create more than one expense account. For example, if it wants to capture impairment as a separate GL account, we can do the impairment posting through special depreciation. So once we have created the asset classes and we have created the GL accounts, we have to map them together using transaction code AO90. So in AO90, against each asset class and each chart of depreciation, we'll define what is the GL account for gross block, accumulated depreciation, profit loss on sale, and depreciation expense. Once this is done, we move on to create depreciation key. While creating the depreciation key, we have to define base method. That is whether we should calculate the depreciation as per stated percentage or as per the useful life, or it's also possible to calculate the 100% depreciation at the time of acquisition, for example, of low value assets. In the depreciation key, we also define multi-level methods by which assets can be depreciated at different rates for different intervals. So the depreciation key, we create various other attributes such as base method, period control, multi-level methods. By multi-level methods, we mean that if suppose for first 2 years you want to depreciate at X percentage, then for year 3 and year 4 you decide to depreciate at Y percentage, then it is possible through multi-level methods. Then there is a possibility to define changeover method. So suppose your company has a requirement that when the depreciation reaches 40% of my gross block, when accumulated depreciation reaches that value, then you want to switch over, like you want to calculate the depreciation at a different rate. That is possible through the depreciation changeover method. Then we also maintain multiple shift factor indicator. So like if you want to calculate extra depreciation for extra shift, then it is possible. And then we can also define the treatment of scrap value. Like at the time of asset master creation, we define scrap value of the asset. So in the depreciation key, we define if the depreciation has to be calculated after deduction of the scrap value or not. Next configuration step is the period control. So you are aware that we have FI period control, which we call fiscal year variant. And now we have to assign the fiscal year variant with the asset period control. So the last valid calendar date is also defined here. And for example, if the entity follows April to March year, then month 01 Jan will be January, will be period 10. So the system calculates depreciation on retirement or acquisition for completed month if we define that in the period control methods. Moving on to the section of master data. So when we begin the asset accounting, we always begin with creation of the asset master. So I have divided asset master into 4 categories. The first and the most common category will be the main asset. So the transaction code for creating main asset code will be AS01 for creation, AS02 for change, and AS03 for display. So this is the most common transaction through which a user creates the asset master. There are some mandatory fields, which again you can define based on the field status group of the asset class. So the fields that we define in the asset master are the asset description, cost center, its physical location, shift factor. If you want to capture the asset against against a budget, you can define the internal order. You have to define the depreciation key, life of the asset, scrap value if required. And whenever you create asset AS01, you have there are 2 mandatory fields which you have to put, which is the asset class and the company code. And then when you create the asset, so everything is associated with that asset code. So whenever you are doing an asset posting, you will use that asset code to do the asset posting. Second category is a sub-asset. So the transaction code for this is AS11 for sub-asset creation, AS12 for sub-asset change, and AS13 for sub-asset display. So the concept of sub-asset is driven by the IFRS 16, which requires componentization for each part of asset with a cost that is significant in relation to the total cost of the item to be depreciated separately. Another important thing is that you should not create a sub-asset if you cannot physically identify that sub-asset. So just to give you an example, for example, you have a machinery for which the life is 20 years, but there is a component which is fitted in same machinery for which the life is only 5 years. So what you have to do for that small component which has got the life of 5 years, you create a sub-asset of the main asset, and then you depreciate it for 5 years. So it is not going to impact the depreciation on the main asset. So the advantages of creating the sub assets is that it is very easy to see the whole assets together. Like you can put the main asset code, and sub asset code can be put as a range 0 to 999. And when you run the asset reports, everything you can see it together very easily. And when you do the retirement, the sub asset retirement can be done entirely different, like it's separate, and it doesn't have any effect on the main asset. Third category we have is called group asset. So the transaction code for group asset is AS21 creation, AS22 change, AS23 display. And the group asset enables you to link together a number of assets in order to use uniform depreciation methods. So for example, for tax calculations, company wants to use different method, different calculation method, then it decides to create a group asset. So after this assignment of group asset is made, depreciation is no longer determined at the level of the individual asset. but at the level of the group asset. Fourth category is a legacy asset. So the transaction code for legacy asset is for creation AS91, for change AS92, and for display AS93. So once we create the legacy asset, then we upload the opening balances of gross block, accumulated depreciation. And if we are doing during the year implementation, then we'll also upload the for the year depreciation into that. If we are doing the implementation at the beginning of the year, then there is no for the year depreciation, and all the depreciation will be calculated through SAP. So once your AS91 upload is over, there after that depreciation is calculated by SAP automatically. So when we do AS91, it doesn't create any accounting entries. It only creates asset balances, which you see in the various asset reports. For uploading the financial data, we have to use transaction code OASV. Again, we have to run OASV asset class wise. We upload the opening balance of gross block accumulated depreciation from OASV. And once you have done the uploads, the most important thing that you have to check is the balance as per asset what you have uploaded and balance as per OASV is matching or not. If it is not matching, then you are creating trouble for you for future. Because if the opening balance is different, then every year the balances will be different. So this is a very important step to check. GL account creation, we have already discussed that minimum 3 set of GL accounts. And when we create the GL account, we have to define assets as the reconciliation account when we are doing FS00. Now we'll move to asset transactions. So the first transaction is asset acquisition. Asset acquisition from a simple FI route is done from F-90. For large organizations who capitalize their asset through AUC route, then we have to do first we acquire the asset into AUC, and then we have to settle the AUC. AUC settlement is just like when you are settling a vendor line items against a payment. It's approximately the same methodology. So AUC also gets captured line by line, and whenever we create an asset class for AUC, we have to define a tick that this asset class is for AUC, and then the system enables it for line item settlement. Suppose there are 100 line items when you post 100 entries in an AUC. When you are building the asset, basically, like suppose you take 6 months to build the asset, and after 6 months you are going to capitalize it. So when you capitalize it and when you use this transaction AIAB, in AIAB you can define the settlement rules. That suppose there are 100 line items in the AUC and you want to settle 15 line items to certain asset, then while doing AIAB, you set up the settlement rule for 15 assets to this asset class, and you do the settlement through AIBU. Once you do the settlement after this, then system will only show you the 85 remaining open items. So the concept is just like an open item basis. Companies also use project systems. So when you use project system, the entry happens in the project system clearing account, and then you have to settle the WBS element. When you do the WBS element settlement through transaction CJ88, then the amount gets transferred from the project system clearing account to the AUC account. And then once it arrives in the AUC, then you repeat these steps, AIAB and AIB. Assets can also be procured through module. So whenever you create a PR or a PO, then you have to define account assignment category A. The AUC code or the main asset code has to be defined in the PR or the PO under the account assignment tab, and the acquisition entry will take place similar to your inventory acquisition from MIGO. And thereafter, when you do MIRO, then the supplier invoice can be set. Other transactions are like suppose transfer. If the user identifies that an asset has been capitalized in a wrong asset class, then you can do a transfer to another new asset class, or sorry, not asset class, another, you have to create another asset master under the new asset class. And you can do it from ABUMN. When you do from ABUMN, everything like the gross block, accumulated depreciation till the date of transfer is transferred to the new asset code, and the old asset code becomes 0. Then we come to retirement of the asset. I have given some accounting entries here. You can go through these accounting entries which are created. So all these accounting entries are created automatically. We just have to enter the first two items, the customer account and the asset clearing account. This asset clearing account is a very typical account. It's the only purpose of this account is to use in the asset retirement. And when we create this account in FS00, we have to define the field status group as G052. And this in the field status group properties of G052, the asset retirement tab has been marked as a required entry. So when you do F-92 and when you use this asset clearing account, it will ask for a tick, that you have to tick it and put the asset code which you want to retire. So if you go through the accounting entries, you will notice that once your retirement is done, the profit on disposal of assets is automatically created after calculating depreciation till the date of retirement, and the gross block and accumulated depreciation are nullified. So basically the asset will have a zero balance, and then when you whatever profit you earn, that is posted to the GL account in which the profit on sale of asset has been created. And again, this GL account we defined in AO90, which we discussed in the earlier section. While you are doing asset retirement, there is also a possibility to do a partial retirement. So in case of partial retirement, you have to fill the values manually. Retirement without revenue, the transaction is used is ABAVN, and whatever is the amount which is lying in the net block, that automatically is transferred to the expense, and gross block and accumulated depreciation are nullified. For posting some special transactions like special depreciation or writing up an asset or writing down an asset, you can use ABSO, and you can use the relevant transaction type. For running the depreciation, we have transaction code AFAB. This is done once in a month, unless depreciation for, and another important point to note is, unless depreciation for previous month has been posted, you cannot post the depreciation for the new month. And suppose after running the depreciation run, you realize that you have some more capitalizations to be done, then you can do it. And after doing the new capitalizations, you have to rerun AFAB. So there is a possibility to restart the AFAB. And when you restart it, it only calculates the depreciation for the differential amount. And we have to schedule AFAB always in the background. It cannot be run in the foreground. Now, if we realize that any asset postings have gone wrong, there is a possibility of reversal. The AUC settlement is reversed using AIST, and the other asset transactions which you have entered, it's possible to reverse them from AB08. Then there is a very good transaction code called AW01N, which is the Asset Explorer. So a user can understand everything from Asset Explorer. It's a very user-friendly transaction code. You can see, and it runs every fiscal year wide. So for the fiscal year, you can see opening balance, closing balance, depreciation for the year which is posted, which is planned, and then there is a comparison tab. Suppose today you acquire an asset for which the useful life is 25 years. Then it shows you year by year how much it is going to depreciate from 2020 to 2045. You can have a look. It's a very good transaction, and you can also navigate to the master data, as well as it will show you each entry posted for that fiscal year in that asset master, and you click it and you can read to the original FI document. Just touching base upon the periodic processing transactions. So for opening a new asset period, we use transaction AJRW, and closing an old asset period, we use AJAB. So very important point here is that at any point of time, only two asset periods can remain open. Okay, so the current year and the previous year. So if you don't close your asset period, you cannot open the third asset period, right? So it is different from the FI. Like in FI, we can open as many number of years as we want. But in asset module, it's different. You can only open 2 fiscal years at a time. That was something on asset transactions. Then we move to asset reporting. So the most commonly used report to display the asset class wise or asset number wise, because in the selection screen of this report, we have an option whether we want to select it on asset class level or we want to select it asset number level. So the transaction code is AR01 or the S_ALR transaction also I have given. So in this report, we see column wise, like we see asset number, asset sub number, asset class, opening gross block, addition, retirement, transfer, closing gross block, opening accumulated depreciation, depreciation for the year, depreciation retirement, and depreciation transfer, closing depreciation, net opening net block, closing net block. And then there is a possibility of selecting different sort variants where you can bring other information of the asset also in this report, like cost center, your useful life, your scrap value, and these things. The next important transaction which I have listed is this, where you see what are the transactions that have taken place during the year. So when you run this report, you will see the transactions are coming asset transaction type wise, and you can use in dynamic selection. There is a possibility to use you can filter out the transaction based on the transaction type. For example, I have identified here transaction type 341 and 346, which are used to display whatever assets I have capitalized during the using an AUC code. So in simple terminology, like in FI, we have got posting keys. Similarly, in assets, we have got these transaction types to classify various transactions. Another very useful transaction which people use during the time of audit or management reporting is having to view what profit or loss I made on the retirement. So this transaction gives you the retired gross block, accumulated depreciation, net block, retirement revenue, and profit or loss made on retirement. Then the last transaction which I have listed is for viewing the asset master data. So you can see a lot of fields like cost center, physical location, inventory number, asset super number, plant, lot of fields that we fill at the time of creation of asset master. If we need to filter out that I want to see assets only for these particular physical locations, using the dynamic selection in this report, you can filter them out. If you put that physical location, or I want to see the assets only for the particular cost center, then we can put it in the selection screen, and when we execute the data, the system will show for that particular, based on the information, it will display the data. So thank you, friends. I have covered the document, and in case you have any questions about asset accounting, you can always reach me. Thank you.